Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Today, we're going to talk about the reverse housing crash. It is a housing crash opposite. It's the opposite of a housing. It's like the unhousing crash.
Okay, you gave it away.
If it was what's the cola? Was 7-Up no, 7-Up was the uncola.
Right.
This is the 7-Up of the housing market right now. We're going to go through a market update for Vegas. I imagine there are other markets that the same thing is happening, but our market is absolutely on fire in a way we have never seen. This is crazy.
It is.
We're going to go through these numbers. What's happening is pretty crazy. Okay, what we're going to do is we're just going to jump right into slides, and we'll just talk about everything as we go. So every week we do this update. We grab the data. It comes out. Basically, we get to see it Sunday. Mm-hmm. So it comes out about Sunday's the day they update the data. So that's why we do these videos to come out for Monday morning. Okay, the first thing we're talking about here is the median list price. Median list price has gone from $530 to $549. Now, some of that's misleading because the houses on the bottom end of the market are flying off quicker, right? And
some of it's because we have a lot of houses on the upper end.
Yeah, there's a lot of houses on the upper end. Okay, that is interesting. It was $530 December 15th. It's $549. So the median price has gone up 20. Now remember, we don't like to use median price. Zillow loves it. All the crashers like to talk about median price when they were talking about the 6 months during 2022, when it appeared home prices went down 8% or so. But what actually happened was it was just more smaller homes coming on the market, more higher end homes not coming on the market. So it was more of the mix of homes, right?
Correct.
Okay.
So median is about the mix of homes.
Median is about the mix of homes. Okay, here's the one that's really important. Price per square foot.
Woohoo.
Price per square foot, Juana, why is this more important than median?
So this is a much more accurate trend to follow, right? Because it's, for the most part, it is price agnostic as far as the value of the home. So whether the home is worth $500,000 or $1.5 million, the price per square foot tends to be a more true measure of value.
Right. Because if more higher end homes come on the market, then the list prices seem to go up. Or if more of them sell, or if less of them sell, it changes the next.
Same thing with averages, right? When you're averaging homes, same thing happens. But when you're looking at the price per square foot, again, that's a more accurate way to look at the market.
Yeah, the average on these numbers both of these would be $700,000. Mm-hmm. That would be the average, but the median is the middle house. Okay, price per square foot, $258. December 22nd. We're talking 5 weeks ago. This has gone up every week. It's $266. It's up $8 a square foot. What this means is that 2,000 square foot house in Vegas is up $16,000 in 5 weeks. Mm-hmm. Now remember, there's people out there going, I don't want to buy a house because it's $400 a month cheaper for me to rent. You just gave up $16,000. Like somebody who bought a house in this fall, I know this happened. Somebody went out and bought a house this fall. And then a friend or relative said, I can't believe this is the most overpriced, crazy thing you've ever done. And you're paying so much a month. And now they're like, hey, I just checked and my house is up $16,000. Now, that doesn't mean anything because it's not pocketable money. It's not bankable.
Right. So look, the only time that the price of your home matters is when you buy your home and when you sell your home.
Yeah.
Everything in between is just entertainment.
Yeah, absolutely. Here's the other one that's very interesting. Friday, December 1st, we had 2,600 homes on the market. We have 2,200. Now, as a percentage, that's pretty substantial. It's over 15%. Now, it is normal this time to have this trend down. Mm-hmm. But we're starting from a low. We never really built up a big inventory of homes this last fall.
Right.
It was a very super competitive market. Another interesting stat that I read, in Vegas, we average 2 offers per house.
Right.
Now, that's an average. That means some houses will get 1 after 2 months, and then some will get 5 within the first week, right?
Right.
It's an average.
So here's the weird thing. And this is anecdotal, but it just seems to me that a house will sit on the market sometimes for a couple months with no game, nothing going on, and then all of a sudden it's like a party in there. Everybody goes to see the house and everybody wants to write an offer. And it's the same thing when houses first come on the market. It's like a party in there. Everybody wants to see the house and everybody wants to write an offer. And so I think buyers kind of have a hard time with that. Their thing is, well, how can, this house been on the market for 2 months? Do they really have multiple offers? Well, they're telling you they have multiple offers. They probably do. And we see this all the time. And it's just a head scratcher for me.
We're going to do a whole video on that because we've done over 3,000 listings, and we have a really good idea for why it's a terrible idea to overstate how much activity you have in a house. It's game theory, but I'll explain it in detail why it's a bad idea to just lie and say, oh, well, we have other offers. You actually do worse for your client than being truthful.
Not only that, but it's unethical.
It is unethical.
And it is illegal.
Yeah. So, you're not actually supposed to disclose the presence of any other offers or the price without explicit consent from the seller. So you can't even say, I have another offer. If the seller doesn't give you express permission to say so, they have to say, I will allow you to do it. It's a conversation we have at every listing appointment. We talk about this.
Right.
And then they always say, why is this good for us either way? And we explain it.
Right. And then in our listing agreements here in Southern Nevada, there's actually a box for the seller to check, allowing us to divulge the presence of other offers.
And as well as price and terms.
Yes.
Okay. This one I thought was interesting. We're going to hit this, then we're going to hit some of the other charts. I think the charts are very telling. This is Market Action Index. You guys have seen this before. Now, what I did was I took out the 90-day average. The 90-day average is a smoothed out version. It looks back 90 days and averages what the Market Action Index was, so it lags substantially. If you go to 7-day average, it's what it did over the last 7 days. This is more volatile because it's a shorter number. What's interesting is the average has been the high 30s, low 40s, basically for a year. At this time last year, it was like 37. It popped this week to over 50. Now, we did have it do the same thing late last spring. We had a really hot week. You can see the last 2 times this thing popped was 2021 and 2022. Vegas, typically, the market runs at about 40. As a matter of fact, if you go all the way to the left this chart, 2019 was a totally normal market in Vegas. Market index was literally 40 the entire year, all the way to till COVID and all that started happening. So you could see that a normal market got substantially changed. The other thing too is whenever the market gets hot, it generally means home prices going up. Mm-hmm. So we'll watch this. We'll see what it does. It's possible next week that this is an anomaly, but it could be 60 next week, or it could be 52 or 45 or whatever. But I wanted to show you this because you could see what happened in 2021 when interest rates went to basically zero, and then how it turned the housing market on a dime, literally turned open the floodgates. Mm-hmm. Okay.
So if you want to have some fun, put down in the comments. This week it's 50. What do you think the Market Action Index will be next week?
Yeah, that'd be a fun one. That's kind of a random one.
Yeah, just something for fun.
Yeah, market action. Okay. One thing weird on this chart here, I don't know why they did this. This is an index. The highest it could possibly be is 100. Mm-hmm. It could be 0 or 100. I don't know why they put on their chart, they show 120. It cannot pop. It's an index, meaning it's indexed, which has a range. Any index has a range of 0 to 100. It's like a probability. Something either doesn't happen or happens. So the range of probabilities between 0 and 1 for all of you math people. I don't know why in this chart they have it at 0 at the bottom, but then they have it at 120, but it shouldn't be. It should only go to 100. Okay. Anyway, price per square foot. You can see 2 major things happening here on this chart. Okay. Go all the way to the left, 2019, 2020. Our normal market going up 3 to 5% a year. Interest rates start dropping substantially. Demand for housing takes off. Institutional investors, the whole thing ticks off, and you can see home prices rocket for about 2 straight years. Then you get the clamp down of interest rates. Mm-hmm. Now, we were told, interest rates would cause 40, 50% home price drop, right?
Well, it didn't cause home price values to drop, but it
Yeah.
did cause home transactions to drop off the cliff because people who owned homes and had great interest rates didn't want to sell them.
The other thing too on this, if you look at 2022 to 2023, it's about the same, meaning a price today, 2 years ago versus today, a year ago, home prices are about the same. There was that little hump. That was a artificial thing because a bunch of people flooded in to buy homes because they still had locked it like a rate at under 5%. Mm-hmm. Okay. This is what I think is interesting about two things interesting about this price per square foot chart. Wanda, you can talk about those. Okay. The first one is look at the way this thing is taking off. It's taking off, it looks like, at a greater rate than we had a year ago, 2 years ago, 3 years ago, 4 years ago. It literally looks like this spring is going to be really hot.
Right. So that makes actually a lot of sense, right? It makes sense because now you have people who see on the horizon lower interest rates, so they're using this as their last opportunity to buy the dip before everybody else jumps in and bids homes up. So that's why you're having increased demand. I mean, we've already had more demand than we've had supply, but the volume of demand is increasing because people see lower interest rates in the near term.
Here's the other thing about this. Okay, go back 2 years ago. Price per square foot in Vegas was about $250. Mm-hmm. Okay, now remember, rates were still 3%. Mm-hmm. They were under 4%, 3 and change. The last time we looked, they were about 6.6. So let's say they're doubled. If I had made a video 2 years ago and said, interest rates are going to double over the next 2 years, but home prices will be more, you will pay more for the same house than today, even though interest rates are doubled, I guarantee you the Crash Bros would have literally taken that clip of video and posted it all over the internet. People would have been in the comments talking about how stupid we were. We didn't know anything. But for some reason, here we are 2 years, Juana. Mm-hmm. Why is it with much higher interest rates, our home prices more in Las Vegas than they were 2 years ago today?
Supply and demand, right? I mean, that's really the bottom line. We have more people chasing fewer homes, and that is in some places causing a lot of multiple offers, which is causing higher prices, and in some places it's just supporting existing values. But overall, the market is up from where it was a couple of years ago. We
have only built in the last 12 months 4,000 apartment units, meaning not a complex's door, like an apartment. We have 70,000 people that are likely to move to Vegas in the next year. That's the sort of idea. 4,000 apartments is not enough to hold 70,000 people. Mm-hmm. When my mom's family came over from Italy, they lived in a 2-bedroom apartment, and there were 13 of them. It was my great-grandparents, my grandpa, and the 10 kids, and then one of the kids was already married and then had a kid. So there was like all these Italians in a 2-bedroom place in the early 1900s in New York City. This doesn't happen here in Vegas. You don't have, a bunch of immigrants staying in one apartment. Okay.
Well, I mean, we do tend to have some densely occupied dwellings at times, but it's certainly not the norm.
Yeah. So. And we've underbuilt new homes, severely underbuilt new homes. Mm-hmm. So this is, if you go to any of the new home builders and try to find out where they are with building, bottom line is supply and demand is what drives. Interest rate is a factor. It's a factor of demand. But when over half of all houses in Vegas are owned free and clear, mm-hmm. which is actual number, it's over 50%. We have people still buying cash. They don't really care about interest rates. They're looking at other factors.
Right. So people are able to buy cash in Vegas for a couple of reasons. One, because on the lower end, homes are still relatively inexpensive compared to other places. And on the upper end, we're attracting people for whom placing cash in real estate is a sound way to park their money.
Inventory is substantially down. This chart here, if you look all the way to the left, that was the last time we had a normal market. What's sad is in about a year, we're not going to know what a normal market was. It won't show up on this chart anymore. And I think it's interesting because people get used to whatever is happening now. And if it happens long enough, they get used to it, which is how humans behave.
Right. I mean, look, we're adaptable creatures. That's why we've survived.
If you had plucked somebody from 1981 and said, okay, we're going through a crisis, a real estate crisis because interest rates are so high, they would be, oh my God, they must be 30%. You'd be, no, they're like almost 7. And they'd be like, what? I've got an 18% loan on my house. What do you mean they're 7%? I want to refi and get a 7%. If you get 7%, okay. Inventory here is absolutely it's amazing to me that in a high interest rate environment that we have no homes for sale. We are back to the 2021, which was the hottest year ever in real estate, and almost year 2022, the second hottest year in real estate. Cooled quite a bit going in the fall. Now, a lot of that was because there were a lot of sellers who got told by real estate agent the housing market was going to crash, and they dumped their properties at a severe discount, meaning they just put them on the market, said, I got to sell it in a week. I need to sell it before the market crashes. And then they accepted $30,000 under the last person that sold. So they went through this little free feeding frenzy, okay? The interesting thing about the inventory chart too is every year it's fallen from this point, meaning it still has a go down. We haven't even really seen it go down it's gone down for like a year and a half now.
Right.
We've just been on this downward trend.
So I think we're still going to have more transactions this spring than we did last spring. I just don't know that the inventory will climb sufficiently to show up meaningfully on these charts because I think properties will churn relatively quickly.
The last chart we're going to look at, market segments. Now, what's interesting about this is we've got 4 market segments. The top is the top quarter of all homes by price, then the second quarter, third quarter, and the bottom quarter, okay? The most important columns are where it says new and absorbed. So let's start with the top one. At the 1.25 million median, the highest quarter price of homes, there were 46 houses that came on the market, but 58 were sold total. Yep. So 12 more houses sold than came on the market. So we have 12 less houses for sale in that price range. What's really interesting is the next two were all pretty close, but the bottom one, the bottom quarter, only 100 new properties came on the market in the bottom quarter, but 140 were purchased. Juana, why is this? Why do people in the bottom, are they less likely to sell the house? And then but when they do come on the market, people are more likely to try to buy them. What's a phenomenon going on with the bottom quarter of the market?
So the bottom quarter is an interesting segment. So the bottom quarter is those entry buyers and investors, right? Because that's where the best return on investment lies, because you pay the least amount of money and you get the most rent based on your investment. The more you spend on a property, you actually have diminishing returns. So that bottom segment of the market is composed of first-time buyers and these investors. So you've got 2 groups as opposed to the other 3 segments that are generally just one group of people. It's a pretty homogeneous group. Those 3 segments, the middle, the upper, and the top, generally tend to be owner-occupied. So that's why you see a lot more activity at the bottom. So let's face it, I mean, the bottom is the most affordable no matter where you are on the price point, right? So that's the reason why you're getting so much activity at the bottom. The thing is that when you're bringing 100 properties on the market and you're selling 140, that's not sustainable because you're going to extinguish your inventory completely. So that's the reason why we've been asking that if you are, regardless of price point, that if you are thinking of selling and maybe you need to sell, but you need to stay in the house, maybe because you're having a new home built, or maybe because you'll be moving and you're uncertain about when you're moving, whatever the reason. But what you'd like to do is sell your home and rent it back for an indeterminate amount of time please reach out to us. We have investors who would love to purchase your home and turn around and have you rented for an indeterminate amount of time. These properties are meant to be rented, so it's not like these people want to move into them. So you don't have that burden to move out in a certain amount of time. So please reach out to us. Todd will put our contact information, and we'd love to help you.
We've done a bunch of these. It's very, for our investors, it's very beneficial for both the investor and the person selling the house. Because there are sometimes people say, I need to sell now, and this is the reason, but I can't move. Like we've had military people. I've got orders in 6 months, but I don't want to have to sell my house then. I would like to sell it now and rent back for like 3 months. And I need to stay in the house. But then when I move, I can just move. I don't have to worry about selling, but I need my money. So I need this like 3-month rent back. And it's hard to do in a market where, or if you're in a price range where it's owner occupant, they want the house. So chances are if it's a $4 million house, they're not going to let you stay in it for a year and pay them, $20,000. Maybe they will. Maybe you can stay in it for a year and you pay them, like whatever 20 grand a month or
whatever market rent is. Yeah. And there are people who are having homes built, and that's going to be a while, and it's uncertain when the home will be finished. Maybe it's a year, maybe it's 14 months, 16 months, whatever. And people are like, you know what, I would just like to get my money now so that no matter what happens with the market, I have my money and I can move forward with my new home purchase. That might be your situation. So whatever your situation is, just reach out to us and let's have a conversation.
Yes. That was it for the data. We're going to track this every week. We'll do this update every week because it's just moving too quickly. And I did honestly, I wouldn't, if you'd have asked me a month ago, I'd have said we would have kind of slid into the spring. It would have kind of been one of those sliding in, benign, chilling out. I didn't expect it to be quite this hot. So I'm a little surprised that it's like $8 a square foot for 5 weeks to me that's obviously not sustainable.
Right.
And but interesting to see what happens to home prices. We're going to beat the peak that we had in 2022. It's going to happen probably February or March. We're going to beat it substantially. So that'll be kind of fun because remember that peak was super artificial. It wasn't really what all homes were worth. It was just what homes were worth in 1 month to a subset of people who were getting loans. Because we were actively selling houses, and you could hear the franticness on the buyer agents when they were calling us, going, "You have 5 offers. We need to get his loan. He can lock the loan. He's got to get the property like in the next 48 hours, and we don't have time to wait for counter offers. His interest rates are going up really quick, and I'm going to lose the buyer."
Right.
Yeah. So
anyway, hope you got something out of the video. Thank you for watching from Hero and Hero Support. We thank you. Please remember to like the video, subscribe, hit the notification bell, share the video, leave us your comments, and we'll see you on the next video.
I think actually, instead of Hero and Hero Support, since I flew tactical jets in the Marine Corps, it should be Flight Lead and Wingman.
There you go.
I'm the flight lead, and you're my wingman.
There you go. So, but if you know what movie Hero and Hero Support is from,
oh my God, you can't Google it. You have to know it.
Yes.
Hero and Hero Support.
Put that in the comments. So a little bit of fun. We'll see you on the next video. Bye.
Bye.